Hi, this is Paul from globaltradingsoftware.com, and this is the first in the series of continual trading for our Stocks Predator users, the xBrat Stocks Predator standalone dashboard from xBrat, using lots of different scanners, both fundamental and technical, and looking at those confluences within there. So this is real examples. I've run the scan today, and we're going to go through a couple of examples right now. So first of all, the main screen when you'll switch on, one of the things we're talking about today mainly is this confluence meter, as you can see here on the left. So when you need to switch this off every night, you wake up in the morning, you switch it back on again, and the scan's already ran on the server, it will update your dashboard. Okay. The next thing really is to understand the confluence meter itself. And I've chosen two examples today. The first example one, is confluence of bullish scans on EDR. So XA is the xBrat algo, so there's been an xBrat algo signal at the end of yesterday, and there is unusual options activity within the last month. Okay, this is critical, and you'll see why. And then the next one is what we've got: conflicting confluences of bullish and bearish scans. So one of the things I always talk about is confluences need to flow in the same direction. It's like a river. The confluences, those tributaries, if you like, need to run and increase the flow. If there's something working against it, like a dam and altering the path, then we have to be very careful. So conflicting confluences can slow or actually change directional flow. When you've got confluence in the same direction, that increase in directional flow is pretty much apparent in most of the situations. So we're going to go to example one, and this is the confluence of bullish scans on EDR. So what happens is when you've clicked, you can double click on one of those buttons, one of those green buttons for EDR, and this one was on the unusual options activity. So if I just go back slightly, on EDR here, UA, you would double click on there, and then it would open up the unusual options activity screen. Okay, so first of all, the thing to note is we've got EDR here. The date of these calls were the 1st of November. I'm filming this on the 2nd of November, so they're very new. Okay, stock price at the time is $23.47. The strike price is $26, so that's the price they expect to take profit. That's our target price, if you like. Expiration is the 17th of November, so it's not too far out, and we'll discuss why in a little while. So again, strike price 26, that's our target. The expiration is the 17th of November, not too far away, but again, we're going to talk about that in a minute. So one thing to notice on the four charts, the first chart on the top left here is a 4-hour chart. So we actually got a 6-star buy, the one candle after a roller coaster buy signal a little while ago. Okay, just after the gap up there, that's an early signal on that 4-hour time frame. So there's two different technical indicators and strategies there on that intraday, giving us a buy signal very recently. Then yesterday, on the penultimate 30-minute candle on the VWAP Predator, we can see that that gave us a buy signal. So we're starting to get a confluence of different types of technical analysis here and signals to give us a really strong potential bullish move. And then finally, down on the bottom right, that's the 6-star buy that came on the scanner yesterday. So now we've got this confluence of unusual options activity, sensible strike price, and we're going to look at that in a little bit more detail in a minute, with an expiration, and then we can look on our charts and we can see on different time frames for different types of strategies, we are getting that confluence, that flow increasing, to say this flow to the upside, the momentum is growing. So let's go to the next slide. So what I did with this one is just basically increase the size of that daily time frame with that 6-star buy here. Okay. First thing to note is why did there's reasons why those institutional traders shows that strike price. Okay, so the only reason that has come on the scanner is because there's unusual options activity. There's a lot of volume. That lot of volume is from institutional traders, not from retail traders. Okay, now very, very simple analysis on this daily chart. We can see it's printed automatically a bat pattern that was completed just here. So when we actually join up the D and the origin pivot here, we've got a big sort of resistance zone, and right in the middle of that is $26. Yes, there would have been a great options contract for that, but that's what they're looking for. They're looking for a good options contract within a sensible target price here. The next thing we need to understand is there's earnings on the 8th of November. So what you can deduce from this is they're expecting a bullish move up until earnings, and their price, their target, is $26, and so should ours. Okay, we've got time. It's only the 2nd of November today. In theory, what we're looking for is we've had that unusual options activity on the 1st. Also on the 1st, on those smaller time frames, on the 4 hour in particular, we had 2 signals for xBrat algo and the roller coaster, and then on the 2nd we had intraday with that VWAP predator buy, and the daily candle closed with a 6-star buy in the xBrat algo. Remember, 6-star is 12 out of 12 points of control, so 12 confluences coming together technically to give us that signal. We've then got a really sensible price here. So we've got to look today for a stock market order to go long at 24.01. Okay, breaking through that $24 mark with a target of $26. And that's how we start from that confluence meter. We then do some very simple analysis, making sure we understand the date of those calls, strike price, expiration, look at the charts, understand we've got that confluence with that 6-star, but look at those other time frames as well. Look at that flow. That's what's going to happen. And in reality, this looks like a really good trade. Today we can see it's gapping up pre-market to 23.65. It closed at 23.47 yesterday. What we're looking for is that momentum to build. We have got NFP this week, tomorrow. That could change things slightly, but in reality, this is a strong start. We've got a gap up. We got earnings on the 8th of November. We would look for this to run to recent resistance before earnings. So this looks a really great trade. So remember, strike price $26. That's where that target is, right in that resistance zone. It's sensible. And that expiration 17th of 11th. So that, you know, they've not looked for an expiration before earnings, because they've got to pick and choose those right options contract, and those mid-November contracts, those expirations would have been the best value to reach $26. Again, last thing, got to get out of this trade before earnings. You cannot predict what earnings are going to do. This is a trade into earnings. Get out before earnings. So the next example is quite a cute one, really. So example 2 is conflicting confluence of bullish and bearish scans. So remember, on HESM, on the xBrat algo, we got a red. So there's a bearish signal. But on unusual options activity, remember that scanner runs for the last 30 days because it's very important. We can pick up during that period. That's green. So we need to understand a little bit more here that those conflicting confluences can be troublesome. But I just wanted to point out a few things on these charts here as well. So there's our strike price of $31. We can see actually it did hit $31. More importantly, there's our 4-star sell signal here. So that's where our xBrat algo sell signals coming down here. Look at the date on the options, 20th of the 10th. Okay, 20th of the 10th. That's already gone. That was just before earnings. So we're going to go through that in a little bit more detail. Also, just after earnings on the 4 hour, we got a roller coaster signal, and that short is in and it's going pretty well. So even though we got that initial bullish on the confluence meter of those options, we can see that that's actually done, been and gone. It actually was a previous signal for longs on the confluence meter, and I'm going to show you that in a minute. So earnings was on the 25th of October. The calls were entered, trades were entered on the 20th of October. That's when we got a 6-star buy, okay? We had a 31 strike price. This is similar to the trade that we've just talked about. So on the confluence meter on the 20th of October, or the 21st of October, we had 2 green lights. That was the trade there. But now that same green light is there in the options activity because it's less than a month ago, but we have a 4-star sell signal. So we're going to ignore it. We're not going to go long. We're not going to go short because you've got conflicting signals. Very, very important here. And then just go on to the 4-hour chart, we can see here, this is a very good stock, for example, that reacts very well with a roller coaster. We've got a short trade here, a long trade here, and we're in that short right now from the reaction after earnings. This was the bullish run up that we encountered from previous confluence meter signals, and those 31 strike price when it hit. See what happens when it hit. Starts to sell off just before earnings, and then the earnings it just moves up a little bit, and then that just came down again. So always be out before earnings. These are really some of the short-term plays that we can get before earnings with that confluence meter. And remember, that confluence meter showed about 6 stocks out of 8,000 today. So this is very, very important to understand that we're only trying to find the cream of the crop. We're not trying to overtrade. If we can only get 1, maybe 2 trades a week, that's fine, because that starts to build up. So what I'm going to do is with these sessions is I'm going to look at more shorter term plays like this, but also when they come up, the longer term plays as well, the longer term swings. So these are short term swings that we discussed today in this session. So remember, confluences in the same direction increase directional flow. Conflicting confluences can slow directional flow. This confluence meter is very important. The scans work. Overnight. When you finish the trading day, switch your dashboard off, switch it back on in the morning, and it will update from the servers. If there are any confluences they will put on there, you've just got to decipher whether they're conflicting or they're actually in the same direction, and then do your analysis. So just run through a simple analysis today, and I will be doing more and more of these trainings with different scenarios. Hopefully that helps. Speak to you all really soon.